Investing is something that is very attainable. Nowadays, is very simple and convenient. If you ever wonder what a passive investment is and how you can make money with it, then keep watching because this video is for you. Meanwhile, today I'm grabbing a double IPA. So let's get started. It has a citrus type of flavor. It's bitter, but not to the point where the bitterness overwhelms the flavor. Very crisp and refreshing. So, salud. Hello everyone. My name is Joe, once again here with you guys. And I'm just a sailing guy trying to navigate the world of investments. So thank you for joining me. First, let's get started with a little bit of history about understanding index funds and ETFs. Because a way that you can invest and without worrying about too much whether a single company price is going up and down is by investing in an index fund or an ETF. In 1976, Jack Bogle, one of the greatest investors of our time, founded Vanguard 500, the first index trust fund. Mr. Bogle's idea was to create this fund so that it would closely track the S&P 500 index. So with a single purchase of an index fund, you will be the owner of more than 100 companies. And I am not exaggerating when I say that Mr. Bogle did more for the individual investor than anyone else has done in the past century. So the most important thing for us to remember is that one share of an index fund is based on the S&P 500 and provides ownership in hundreds of companies. There are some index funds that are actively managed and some that are passive. For managed mutual funds, you have fund managers or real people that make decisions on buying and selling different stocks, and all of this is to achieve the goal of the specific index fund. If you decide to purchase one of these index funds, make sure to understand the expense ratio or the money that you're paying for them to manage this fund. So look at Morningstar, and I calculated the average expense ratio for an active index fund, and it's about 1%. Other index funds are more passive. So this means that there aren't really any fund managers actively buying and selling stocks. There are fees for the passive index funds, but they're lower than the active funds. The average ratio of passive index funds, it was less than 0.8%, less than a percent. Remember again that this is the average and not the lowest. It's also very important to know that there's a minimum amount needed to invest. For example, the Vanguard 500 Index Admiral shares, there is a minimum of $3,000 to invest. And the expense ratio is about 0.04%, which I highly suggest for you to take some time and just take a look at the selection of Vanguard index funds to learn more about them, and also to learn about the initial investment and the expense ratio or the money that you need to pay for them to keep your account active. One last thing about index funds before we go into ETFs is that index funds can only be bought and sold at the end of the day. If you want to buy into an index fund, then you can purchase it directly from a mutual fund company or a broker. This is just for informational purposes only. You need to take some time, and just dig a little bit deeper into the index fund. But you have the basic knowledge, and that's really all it takes for you to start investing in one. Salud, mis amigos. So after the popularity of index funds, then exchange traded funds or ETFs were created in the 1990s. Just like index funds, most ETFs replicate a market index to yield the average return for that index. So you will find ETFs that follow or replicate the S&P 500 or the Dow or the NASDAQ. When the market crashed in 2008, which it wasn't too far, and a lot of us remember, the failure of many active managers to navigate those markets, the choppy markets, get further popularity to ETFs, because now for an ETF, you don't need an active manager, and you don't actually need to go to a broker or a company, to get an ETF, because now you can use your own trading account and you can buy and sell your ETFs. So this is why ETFs, they trade like a regular stock, and the price will fluctuate like any other stock depending on the demand of the ETF. So just like I said, ETF is the fund that will track a stock market index and trade like regular stocks on the exchange. So let's do a quick recap. Index funds, there's a minimum amount required to purchase the index funds. Like we can see here for the Vanguard 500 Index Fund Admiral shares, There's a minimum investment of $3,000, and the expense ratio as of 4/26/2019 is 0.04%. Can only be bought and sold at the end of the day and through a broker or a company. But because you are investing initially an amount, you have access to your capital, so you can withdraw or you can continue and make investments. So for example, if I want to make an investment of $100 each month, I can go into my account. As an example, I can have Vanguard withdraw $50 or $100 from my account each month. For ETFs, so ETFs, they trade like a regular stock. They can be bought and sold during the market open hours. And the price of the ETF is driven by supply and demand. And if you want access to your capital, your cash, then you would actually have to sell your stocks or sell a stock. And then from there you can withdraw. And if you want to add to your position, then you will have to buy the whole stock. So for example, if we look at VU, right now this one is at $299.68. So if I want to buy into this ETF, I can buy it for $299.68. 2 weeks or 3 weeks for now, if it's still at this price or a little bit higher, then I just have to pay whatever price it's the market currently has, so I can add to my position. I know that this is not sexy, and this is not showing you millions and millions and a nice red hot rod or a mansion. This is reality, and I do admire, all those people that show all these fancy cars and fancy mansions. I, on the other hand, like I said, I'm starting in the world of investments. I've been doing it for about 2 years. I've been learning a lot, and I still continue to learn. And this is something that I have to learn, before, I make some of the solid investments. And this way, I can cut back on the mistakes that I was making and losing money on. Okay, so now where do we buy an index fund? Well, one of the first things that you can do is you can always Google it. Just go to Google and see where you can find it. But if you go into the Vanguard.com website, one of the things that you can do is you can just go into the search side, and then I'm just going to search for index funds. So once I put index here, it shows me like all of the ones that they have right now. So I can click on one, and once I click on the index fund, I get their overview. One of the things that I really like is that they give you a risk potential, and the risk potential is 1 being less risky, and this is obviously less reward, 5 more riskier, but you're gonna get more reward. And it tells you like hypothetically how much money you've made. For example, if in 2009 you have started with $10,000, and just like those $10,000 all the way to 2019, with this specific index fund you will have in your bank. So here they show you the expense ratio, and remember that this is a monthly percentage that you're paying to keep their account with Vanguard. Here's another piece of information that I wanted to show you from Vanguard. For example, the minimum investments requirements. Right now, the only place where you can get into Vanguard is the Admiral shares. And they say that they have index funds starting at $3,000. Actively managed funds are $50,000. And for certain sector-specific index funds, $100,000. So depending on how much money you have, then you can look at one of those Admiral shares. By no way I'm endorsing Vanguard. It's just one of the sites that... It was one of the sites that I went when I was learning more about index funds and mutual funds. And I think they have a lot of great information there. So please check them out. And by no means I'm asking you to purchase anything or endorsing what they're selling or what they have. Okay, so the next thing that we want to do is I wanted to show you how I go and purchase an ETF. By the way, I'm using Robinhood for this example. Now I'm using more E-Trade. I like E-Trade because especially now that they're commission free. Before I was using just exclusively Robinhood because they were commission free. But now since E-Trade is also commission free, and I definitely like E-Trade's tools better than Robinhood's, because with Robinhood I was using other tools to be able to look at the stock's performance and do my technical analysis. And if you use the link that underneath the video description for to sign up for Robinhood, you get a free stock and I'll get a free stock, and it'll be like you buying me a beer, or it'll be like us sitting together in a coffee shop and you buy me a cup of coffee. So I really appreciate you. Cheers. It's a really good beer. By the way, see this signal here? It means that they're an independent craft beer. I love craft beer. They're independent, and that's why I try to support my local breweries. The one thing that I do before I decide to purchase an ETF, I do some technical analysis. And what I look on the technical analysis is I like to see the performance of the ETF. So I don't focus so much on the short term, but more on the long term. So I look at the year, and right away I noticed that the trend has been going up, and there's been some dips here. You can see like on June 3rd of this year, it went down to 252, but then you can see how continually it started to increase. I also look at the volume, and you can see when there was a bearish move, for example here, and then for me here will be like the optimal entry point, because I know that this is trending up, and I know that I can get this stock cheap at this point because eventually it'll be trending up. So I also look at patterns, if can I see, like a little cup and handle. So sort of here I can see that once there is a resistance level here, so it seems like it's pulling back a little, which is fine. So it's pulling back, so this even means that it's possibly making like a little flag type of trade. So maybe I can get in right now, because I know that if I can get it here right now, then it might trend back to 299. The 5-year, I like to look at the 5-year because I can see that again it's a winning stock. It's trending up and it's not losing its value. The other thing that I look is, does it pay dividends? So when ETFs, some pay dividends, some don't. So you just kind of have to make a judgment decision here on your part. If it's a good ETF that is trending up, do I want to buy it even though it's not paying dividends? If so, then by all means, buy it. So I can see that this one, see how it has a dividend yield of $1.87. Aside from this ETF trending up, it pays some dividends as well. So, it's like a double whammy here. So would I buy this one? I will definitely buy the Vanguard S&P 500 ETF. And remember that this one will be tracking the S&P 500. So what is an example of an ETF that I will not consider? Let's take a look at this one. PowerShares S&P Small Cap Energy Portfolio. Again, let's look at the trending. So for 1 year, so you can see that this one is trending down. Was a little bit of hope here, but the trending is very bearish. 5-year. So at some point it was valued at $31 and it decreased all the way to $5.90. And if anything, you learn from these videos is that when a stock is trending down, it keeps on trending down until you see like volume or something, or it's like extremely good news that happened that will make the stock price go up again. So the other thing is, just like we did the other one, let's take a look at the volume. If you look at all the reds, this means that there's a lot of bearish moves, very little bullish move here, and this is what made this trend up a little. But then you can see all the bearish moves here. So look at this one here, this one and this one. It means that it's just going to continue to drop and the value to go down. So this is one of the ETFs that I will not consider buying anytime soon. So I hope that you have enjoyed this video. If you did, please like it and subscribe to my channel and ask other people to come and join us, because like I said, we're moving together, we're learning together. There's some things that I know, there's some things that I'm still learning. So if I miss something, leave it in the comments and tell me what else I can do or how else I might be able to help you so we can continue to grow in this journey. And remember, if you are going to drink beer, drink responsibly. See you guys next time. Thank you for sticking by.